Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Viewing the Australian dollar, the market has extended Friday's rebound and kicks off the new week to a relatively firm foot. As we can see here that we've cleared the level of 68.85, which has reinstated the upside potential to 69.95. Behind that is the back of this Dragonfly Doji that needed confirmation, which has been achieved, and therefore wrapping up with the RSI has put a slightly firmer step into the market, and no doubt we'll be looking very much closer to that top side of the range around 69.35 to 69.95. Meanwhile, eyes now look to the RBA meeting minutes later today, and also the US FOMC minutes on Wednesday, with the expectations that the US Federal Reserve will stick to its hawkish stance in the wake of high inflation. Any pullback should find support at 68.65 in the interim. Looking at the euro, the market was rather lackluster due to holiday in the US. That was in observance of President's Day. Meanwhile, looking at the US dollar, market bulls feasted on the US Federal Reserve officials as they made rather many hawkish comments, saying that they would be upsizing rate hikes to ease inflationary pressure. Looking to this week, key economic data shows that global markets will be sensitive to the US FOMC meeting minutes and also the US GDP. While looking to Friday, we also get the release of the US Federal Reserve's preferred measure for inflation, that is the core personal consumption expenditure report, or the core PCE, month on month, with the expectation of outpacing the last release of 0.3% to come in at 0.4%. The year-on-year rate will likely stay unchanged at around 4.5%, suggesting price gains remain elevated. Also, in other economic data, the Eurozone will release the final HICP inflation report. Then, therefore, that could see a slightly revised number that would cement another potential 50 basis point rate hike. The European Central Bank next month. Looking at the technicals, since the posted hammer, the call is to the upside to 107.15.25. It would need to break that level to get further scope up towards 107.80.90, where I feel that's where the bears may ambush and take the market back lower. Although the dollar index, which measures the greenback strength against a basket of 6 major currencies, is consolidating around 103.80, I feel that there is much upside potential to about 105 to 106. That could see the euro back towards the bottom side of the range through 106.20, even though it was rejected, and eventually look towards 105. But I would like to see this impulse to the top side first, around that 107.15.25, before seeing the drop and look back towards the support. The dollar yen outlook still maintains somewhat firmer stance, even though we did see a gravestone posted on Friday. The ADX is still bullish and the RSI is overbought, but still holding to a potential bullish bias with the MACD. Therefore, I feel the market still has potential to rise up towards the region of somewhere at 135.45 to 136, and then maybe see a rejection because we will be overbought, and no doubt could see a pullback to that region seen at 132.85.95. Sterling still holding on to its gains since the rejection of 119.45, and I feel the market may actually edge up towards 120.65 and reassess, due to the fact that the recent sell-off that we saw could see a rejection from that 120.65. So let's not abandon that 119.45 level, as we could see a drop towards 118. Finishing up with gold and oil, but the market was somewhat lackluster due to thin liquidity on Monday, in observance of the market being closed for President's Day in the US. However, the rebound of 1,820 still awaits to be confirmed, and that is this Japanese hammer candlestick. If we get a close above 1,845, then I would say that we're looking up towards 1,863 to 66. But I'm not abandoning the downside due to the heavy technicals. I feel the market will fail to the upside challenge and may see a re-challenge of this level around 1,820 and a close under there would give further scope down towards 1,786 to 89. Oil, well, the market was a little bit on thin liquidity due to the holiday in the US. Nevertheless, we're finding a little bit of momentum coming back into the market. But overall, we may see a rejection from around $79.80-90. So let's just raise this up a little bit. Somewhere around this region here. And then maybe back towards the bottom side of the range. Overall, I'm not overly bullish. I just feel the market's looking for a direction, and a small impulse up would eventually turn it back towards 75.60. Now a break there would give further scope towards 72.40.60 before a bounce. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.